Hello, Warriors. How's everyone doing today? I just got signed by a minor league team here in San Diego. I'm going to be their designated hitter on the San Diego Storm. And speaking of storms, I do believe there is one brewing, but let me just do a quick run through. I'm trying the short side right here of the Euro Aussie. Okay. So when I look at the Euro Aussie here, you could see a three drive formation here. But more importantly, check out the daily, and we're right up against a 200-day moving average. Didn't quite get there. I'm wrong if we close above this 200-day. Very possible that, normally this will perform during periods of risk off, and we are lower in the S&Ps, and NASDAQ's about unchanged. But after yesterday's action in the S&Ps, I still think that 4,300 could be on the table going into next week. I'll show you the pivot in a bit, but I just wanted to show you a trade that I'm trying here, and we'll see what happens. To have a weekly reversal, it's going to have to do some downside work and close back under 157.14. So what we have going on there is, we're still 120 pips away from giving that signal, but a lot of people, we've really been, when you look at this, the low was posted back in February, late February. Here we are in June. So trying to base out, I'm sure there's a lot of people calling this a bottom. I still think that there could be a break to new lows. We're back against, if you look left, you could see the old support line. See this? It's now resistance, comes in right around where we're at. So probing it on the short side, and if I'm shorting it, it is based upon, I don't believe there's going to be big risk off yet. Okay, and a lot can happen in currencies in a week. We could get a big break in Euro Aussie. Should the S&Ps be able to trade 4,300 plus? Yesterday in the S&Ps, I showed the important pivot line that we had right up here. You look left, resistance, 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 held it, took it out, and I said for the S&Ps to stabilize, we needed a candle close back above it, and it did it with abandon later on in the day. It's still my take that, maybe from 4140 to almost 240 is, almost 100 handles. Perhaps we're getting a little continuation formation before we pop one more time, and I am looking for another high in the S&Ps. I'm still being patient in the NASDAQ. I still think there's a shot for 14.4. I've been talking about this for a month now. You could go back and listen to any of my videos. I haven't changed course, even though we had some sell-offs here. I still believe we're going to trade up towards there, and want to show you something now that a lot of you guys that are listening to me are becoming familiar with a three drive formation. So let's go the daily on NASDAQ, okay? So here's drive one, right? Pullback. Here's drive two. Took a little bit more time, 2-3 weeks, right? And then we pulled back, and now we're in drive three up here, right? So on a longer term scale, you see the three drives, but look what happens when I go to the 2 hour. So this is all comprised of within the third drive, and it's a fractal of the three. So actually the third drive will be composed of a smaller time frame three drives. So fractals are real. They do happen. And I've seen this enough times to believe that a lot of these three drive formations have three drive fractals on the third, something I've learned from watching these formations for a while. So you could write that down in your trading journal that on the third drive to be on the lookout for a three drive formation to complete that pattern, fractal of it, of the longer term picture. Okay, so still waiting for this short to occur. When I look at SQQ, looks like we could have a third drive here, 1.27. There's a couple areas I'm looking at potential buys, and it's 973 is 1.272, and then all the way down at 939. So I'm thinking that it's more going to be more in this 970 range. We'll see, because the S&Ps to get up towards that 4,300 still need 80 handles. And right now, um, the S&Ps are weaker, which is uh, different than what we had on the way up. S&Ps were making successive new highs without the NASDAQ, and then the rotation went back to the NASDAQ. A lot of people talking about that the techs do not like higher rates. And, you know, we had that sell off and reversed pretty well from the 36 level. And if we get back above 158, I think we're headed for new highs in yields. So we'll see what happens. If the market's going to continue to be strong, that's how it's going to have a chance for that to occur. Is, you know, you're going to have higher yields. Are going to help bank shares. The financials like the higher yields. That's why we sold off last week. One of the reasons banks were weak as yields started to drop after the day of and after the Fed. This was the Fed, and this was after the Fed, and after the Fed. So really, we're right back to where, even though there's been big damage done in things like gold and silver, and to some degree S&Ps, right, had this sell-off, yields are in the same place. So you really can't blame yields. In fact, to me, I was talking about this yesterday, how fragile markets could be to take $100 out of gold and buck and a half out of silver on just jawboning. And that now I think this is going to be a cloud hanging over the market because the Fed cannot reverse what they just said. They're going to have to do something. So, like I've been saying, it'll be similar to a buy the rumor, sell the fact. The rumor is Powell saying that, you know, we're going to begin to taper. And I'm thinking that the market really doesn't bottom, and that markets remain under pressure until that statement becomes fact. And I'm not sure which month uh, that's going to happen. Maybe it'll be August, maybe it'll be September, but it's the opposite of the Fed put with what we have right now. He's the Fed has kind of boxed themselves into a corner, and they're going to have to move. And now the Fed put, I don't think is there. So still looking for a big shorting opportunity coming up near the end of the month that I've been talking about for 3 weeks now, and I'm trying to be patient and not have FOMO. And what helps me do that is having targets in mind and looking at formations. So I did want to show this. The VIX kind of, in a way, gave an all clear, but here we go with another ghost put right here. Another ghost pin bar. They're everywhere. Every time they try and sell NASDAQ off, look what happens. So it's under accumulation. We haven't made new highs in the market. Maybe we're not going to, but I'm going to sit until early next week, thinking that we have 14.3 to 14.5 in NASDAQ to go for it. Okay, so looking at the euro, had an update yesterday. You know, maybe we get a little flag, a little ABC. I think this would allow um, the markets to rally the dollar weakness that we had, just like right like this, and pound had a little bit more magnitude. This is what gave the market relief yesterday. So The dollar can't just blow to new lows without it having impact on risk. So perhaps there's a little bit more left in this correction, get some type of ABC and cable back to 140. That would be a sell in my book, thinking that we're heading below 130 actually are my targets. If I'm right about the Dixie heading up towards this 95, 96 level. So let's just take a look at this. So here's your weekly chart. We also have a real nice month going on. So we have a little inside week right here. Still think we're going to go for stops here above this level. Above this level, this was the last decent rally we had. It's 93.43. Um, we're going to see if we challenge that or fall short. 92.95 is also going to be some significant resistance in the dollar index. Looking at the yen again with yields, this may have just been just a nice little pullback, and the yen had a three drive but held this 109.68. So this too is projecting higher yields to come, and we could get a move maybe up towards 113, 112 to complete this stage of the yen rally. So we'll see what happens there. Aussie, I'm looking for lower numbers, but we could have some type of follow through in Aussie as well. Here you go. This could be A and this could be B, and I think we're going to at least 72 cents, but perhaps the dollar continues to correct and we get a rally back to 75, 70, 76. So we'll see what happens. I'm just holding some long dollar positions and looking to add if we pull back down towards this 91.40. Back under this level, I think you could say that this was just another bear market rally. I know a lot of people are still in that camp, but I can't ignore the weekly signal that we had last week, and I think that 89.20 is off the table for now before we see 94 to 96. So you have to change your trading psyche a little bit. And instead of selling dollar strength, I think now you want to be buying dollar weakness. The Canadian had a great week last week. I know everyone wants to buy this Canadian lower at 22.60 or so. But when you have moves like that, the market sometimes don't accommodate, and we may rally for one more high before we get a better correction in that. Okay. Any questions so far? Hey Daniel, how you doing? Michael, how you doing? Team, how you doing? Looking at Euro Pound, we've tagged the 78.6 level a few times, trying to hold it. I think that there's a chance that we do not make new lows and we get some type of bear market rally here. Waiting to see if we could challenge last week's lows at the 78.6 level right here. So we'll see what type of low we get here. This would actually be a double bottom if we tested that speed line. Okay. I haven't done anything new there. So my positions right now are long dollar and short Euro Aussie, and waiting for the sell off, one more rally in stock indexes to get short. Yesterday I talked about it was too early to buy the gold, okay, because we had a two drive formation here, 1, 2, and we need one more. And silver, as I pointed out as well, with the gold silver ratio, for the first time in a while, closing over this 68.5. In fact, this could be the first close in a while, 68.5 when you see it. So, we have at least 71.5, I think, coming here. And this makes gold have more strength. It's your preferred long if you're bullish metals, and silver is your preferred short if you're bearish metals. And silver is really on the verge of a third drive to a bottom formation as well. That if you look at it, it'll come in something like this. And traders, if you're watching us on YouTube, I encourage you to come to our platform at TradeGate Hub, register. You could come and you could be asking me questions live. It could be about a method, it could be about a market, but I invite you to come in and interact with me and the team. So we'll see what happens down here at about 25.35 or so in the silver for a possible bear market rally. And I do believe that there will be one. I believe that the gold from, let's see where this will come in. There's a lot of major support at the 1740 level. And the breakdown that I've been saying for a long time happened at that 1840 level. You could see where it took out that black line. I know everyone's paying attention to the weakness in crypto, and you know, I've been negative on it except for once we had a false breakdown. But here you go. This is where I'd be looking to buy gold, maybe right around this 1740-ish, 1750-ish level. We'll see what happens down here for a third drive. So, you know, it's interesting that it's one of my major tools along with RSI to filter out what might be higher or lower probability reversal three drive formations. But it goes to show you that if you just find one method or one technique that works for you and you have the patience, that it works on all time frames. I'm not saying that they don't fail, and maybe I've miscounted that. You know, it's only a two instead of a three, and not if it worked all the time, I'd be a zillionaire. But there's enough of a probability for these being inflection points in the market that if you focused on these formations, you could do pretty well just waiting for them. The entry and exit signals on this formation, I'll get to it maybe this week when we have this third drive. You want to look for some type of positive candle like this. You don't want to just buy this. You need it to show that it's holding and rejecting coming off this line. So gold and silver still looking for lower lows and then some type of bear market rally to occur. I've already covered the S&Ps. Still think the S&Ps have a shot. You look at the daily for a new high. You know, it can everything and anything can happen, and you know this could be a failing rally, but I think we're going to take out this 42.67 level, and you could kind of look at it arithmetically that this has been from 140. Let's just call it in round numbers, 240. Right? So if we start closing back over these highs, you tack on 100 handles, it gives you 43.40. So we'll see what we could accomplish the rest of this week and into the end of the month next week. But I have a more solid number on the NASDAQ up there around 14.4. So um, paying attention to it. If you're a stock trader, the SQQ also is setting up some type of third drive formation. Just wanted to let you know this could be a way for you to participate in the bear market that I'm looking for. And here's the big unveil. All right, this is a big unveil on NASDAQ. And it's a blue speed line. No, it's red. And you see this speed line? It's top secret. It's only for TradeGate Hub members, members of our community. So this is actually my target, a NASDAQ target going into late summer, early fall. We'll see if we get it, but I've drawn speed lines before, and at times they look like magnets. So, you know, we're going to have some support here on the 50-day and then the 200-day, and then this is where we could go to. Just taking a look at the weekly. Look how we're diverging on the weekly. And the 200 week moving average is all the way down here. So this was the high before the COVID crash. That's also a possibility, but I'm going to go with this speed line here. I'll do some fibs and see where that comes in. And when you think about it, 10,000 would just be a normal market correction of 30%, just a normal 30% correction. So I'm still looking for that to occur. Taking a look at the TLT, it's trying to come out of this base. It's kind of a negative week after rallying on the Fed. Also, Paul is talking today, so keep that in mind. I think they used to call this Humphrey Hawkins Day. So here you go, guys. And, you could go back to the top in Bitcoin, and we were back on the Air Trade Gate Hub, and there was a third drive that worked, right? Then I had the black line of death, right? That projected, I was looking for 36 at that time, overshoot. Then I had a flag line drawn here and said it's a false breakdown to be careful, at least not short, and another failing rally out of this flag. And there you go. And if you think you could have hit in Ethereum, it hasn't been any better. And Doggy Coin, Dogecoin or Doggy Coin, you better have some plastic bags for your dog coin if you take it out for a walk. So you clean up. This line, the speed line would give us 842, 850-ish on Ethereum. I don't know why that's not possible for that to happen. So crypto under pressure, China is not a great adversary to have in on any front, geo, market wise. They're also pretty good traders. I mean, they were accumulating grains before the big bull market that we had in grains. So, by being long crypto, you're fighting the Chinese government in a way. So we'll see. I don't think the dust is cleared. Maybe until a guy like Michael Saylor of his company is long, and I think Elon is under break even on his crypto now. I think he's long from 32,000. But you guys have heard of Michael Saylor. I think it's called MicroStrategy. And I actually, Michael, if you're listening to me today, I actually have a theme song for you. And maybe some of you old timers will remember this from a cartoon character. Goes something like this. I'm Michael the Sailor Man. I buy all the crypto I can. Anyway, you better be taking your spinach. How can you do that to shareholders? Just speculate with your company. It's definitely a new era. So the gold shares tried to bounce. Maybe we'll get a bounce, but look at these gaps. Newmont never filled the gap, and I didn't see this. I actually thought when we were here we might get one more high, but you know, as W.D. Gant says, if you don't learn how to change your mind, you won't have any change left. If we get this low in gold, I'm thinking about, and I do think gold will retrace back up towards this level here from a low. So it could be a pretty good trade. It could be, $80 to $100. But this was your breakdown. It held this trend breakout once, twice. But if the market keeps giving you more and more opportunities to trade the same area, I like it to happen only once. I like one retest, but when you get a second, it's like the market saying, "Oh, I know you missed this, Dale, but we're waiting for you. We'll give you another chance to trade this trend line breakout." And the more opportunities Mr. Market gives you, the more skeptical you should become, because breakout tests should just come back to it and accelerate. That didn't happen. Silver. So anyway, I do think that there's see where all these moving averages are converging here, the 50 and 200 day, and then the breakdown. So I am looking for some type of buying opportunity in gold for some type of reflex rally although I don't think the lows come in gold like a lot of people think that this could be it. I think we're going to take out these lows at 1700, head towards 1600, extreme case 1500. But for now, just equality would give us around the 1600 level if we measure this move from here. Okay, so negative on the gold. Silver, I still think can fall back to major support around the 22 level, and silver is acting worse. We'll see what happens from that 3 drive. Here's a risk off currency that's still acting pretty good is the Mexican peso. Perhaps we get some type of pullback in the peso back towards this breakout level at 2018. I'm not going to chase it up here. In fact, it looks like we're going to get some type of third drive up here. Just take a quick look around. Copper's rebounding, but really got hammered. So copper's the first to rebound. Is this going to be a failing rally? I think so. I think 440 is going to be a difficult area to get through. And, I wanted to close with the Russell. Okay. So you see all this action up here in the Russell? It never made new highs. And you see this was a breakout? Well, it was a false breakout. And we had a recovery yesterday. I don't think the Russell makes new highs. It had its chance here to do it. I don't think it does. And I think the Russell could be one of the most vulnerable of all the indexes um, because we've already had a breakout and we've already had a failure here. So all it did yesterday was rally back to the failure. So Russell looks pretty weak to me. I wanted to wrap it with the Russell, have you guys take a look at it. I think that there's a big fall coming in Russell. So you may want to consider there are bearish ETFs. I think it's TZA is a ETF on the Russell. So to me, this looks very vulnerable and is kind of the lead indicator of what's going to happen for the rest of the markets. I wanted to show that, and here's your weekly. Again, false breakout, and this formation alone measures back down to here. This, I think, is viable. And you're talking about, what, 35, 40% down here, back to retrace the top that we had. And it was the same behavior back here in the Russell, not making new highs while everything else was. So why can't we come back and retest this high up here that we had pre-COVID before the crash? Anyway, I think that by the end of the month, a new saying will be if you're long, you're wrong instead of BTFD. So everyone have a great rest of the trading day. Have a great interview lined up for us here at TradeGate Hub on Thursday. Please consider joining us and hanging out and interacting with me. Post your charts. We could talk about it. Don't isolate, collaborate, and do that on TradeGateHub.com. This is Coach saying don't just count your pips, count your blessings, and see everyone tomorrow. Adios.